Yeah, good day, traders, and you're welcome to uh, today's class. And so happy to be here once more. It's been a while. I made a class or a lecture, and as you all know, I've always spoken about SMC, Smart Money Concept. And Smart Money Concept basically involves just three things, two things majorly: market structure and liquidity, which is market structure. Market structure has to do with the trend of the market, the way the market moves. All right, the market moves in structures. So this is basically what we know as market structure. As soon as so far SMC is concerned. So this is market structure. So this structure that I've just illustrated, which is the market made a swing high and a swing low. Then a swing low broke above the previous swing high, causing what we call break of market structure. All right. So causing what we call break of market structure, BMS. All right. So this break of market structure simply means that the market created a high and a low. All right. Then this previous low broke above this high that was formed, causing what creating what we call a higher high. So the reason why it's called a higher high is because this high is higher than this. All right. Then when it made that swing high, it's made another swing low. All right, which is called this is a higher high and a higher low, higher high and higher low. So long as the market keeps making higher highs and higher lows and breaking structures to the upside, it simply means that the market is what? Bullish. All right. So the structure of this market is what? Bullish. So let's label it bullish market structure. All right. Bullish market structure. All right. So this is bullish market structure. And now the next thing you need to ask is what is the next thing to do, the step to take after this. So if you want to take a trade and the market, you've seen that you're on your chart and you see that you're on trading view, market has created a swing high and a swing low, and this low broke above the previous swing high. So the structure to look out for to buy, since it's printing a bullish market structure, is very simple. Now, the market made a swing high and a swing low. The swing low broke above the swing high. Now, how to enter this trade is, now it has formed break of market structure. All right. BMS. So this is, let me zoom in clearly for those. So this is break of market structure. Now, this brings us to the next thing, where to take the trade from. So you mark out the demand zone. When we talk about demand, we're talking about buying, all right? We're talking about market being bullish. So you mark out the last red candle formed before the impulsive move to the upside. So that is called an order block, bullish order block, or you can call it a demand zone. Demand zone is clearly where you're buying from. Now, second part of SMC that I spoke about is I said the market, two things makes up SMC, market structure and liquidity. Now, before the market returns to this demand zone or the point of interest or the bullish order block, so what you have to observe is the market printing lower lows and lower highs. All right, bearish structure. We're going to talk about that either this class or the next one. So the market is likely to come down as if it's going to touch this place. It won't. Then it goes back up. All right, this way. Then come again as if it's going to touch without touching, then goes back, then finally touches. So the market has printed what we call liquidity here because this is double bottom. So liquidity areas are just areas of double bottom, flip zones, trend line liquidity. You can also call this trend line liquidity. You can see the market creating liquidity. All right, trend line liquidity. So when we call liquidity, we mean money where stop losses of retail traders are. As SMT trader, these are criteria that will make us to say, okay, we want to take this trade. So the moment you spotted the break of market structure, you mark out the bullish order block. That's the last red candle before this impulsive move to the upside. Of course, you know that this impulsive move to the upside involves green candles. All right. So then the next thing you do is you place your buy limits here. If you don't have to be on the chart to take the trade, you can just set your limits order, your buy limit, your stop loss below that candle that was formed. Then your target area is this place for your TP. All right. So the swing high created before the return to this POI is where you take your entry from. Then you target that, you take your entry from here, then target the high as your TP. So that is it. So this particular entry now is you have assumed that the moment the market gets to this place, you take your buy to this point. So this entry you've taken here is called risky entry. Then now the second type of entry is confirmation entry, which you have to wait for the market. Now you can see when the market was coming to the downside, it was creating series of lower lows and lower highs, lower low, lower high, then lower low. So you have to wait for the market to break above, then you go to a smaller time frame, wait for the market to break above the previous swing high or lower high created, all right, causing what we call change of character. Then you enter off the lower time frame demand zone, which is here. So here now becomes change of character because the market changed behavior from being bearish to being bullish. Then you get involved and ride the trade. And now the difference between entering at a confirmation entry at the confirmation area and a risky area is that now you've confirmed, instead of your stop loss to be below here, it will just be below the other block that changed, that caused change of character. All right. So this is clearly how to trade using market structure on SMC. All right. So now let's see if we can get a clear example of just a normal illustration as to this is VIX 25. All right, let me just illustrate in anticipation of what this market is likely to do. All right, now I'm analyzing this particular market. Let's see. Okay, this is still the same thing that I was referring to as structure. All right, you can see clearly how this market has been printing series of higher highs, higher lows, higher highs, higher lows. Okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then it failed to break a higher high. Now started breaking below. So it has caused change of character. So in this case, we are now referring to bearish structure because the market has changed behavior from being bullish to being bearish. So how to approach this particular trade, this VIX 25 is that now this was the demand zone that was broken, that was destroyed. So this was where the change of character happened. So what you clearly do is you mark out this last green candle that was formed. Now, we're expecting the market to do what? To return to this point of interest, then we take the short to the downside. When I mean short, when I say short, I'm referring to sell. All right. So this is basically what we're going to be waiting for because the market has done what? Broken these lows. Now, let's look at another way to check the structure. Now, this is clearly higher high, higher low, higher high, higher low. The market keeps protecting the lows and destroying the highs. All right. keeps protecting the lows and destroying the highs. This, then this. All right. So the market has caused change of character here. So this particular demand zone has been violated, causing change of character. So meaning that the market has changed its behavior from being bullish to being bearish. So what you're going to do is you wait until the market returns back to this point, then you take yourself and drive the market to the downside. Let's see, let's check. So for you, for those that are viewing this SMC for the first time, so this is just clearly the structural behavior. You have to observe this higher high and higher low. Then a higher low breaks above the previous swing high. Then you mark out the last green candle that caused the movement to the upside. The last red candle, rather bearish candle that was formed before the impulsive move to the upside. Then mark that, extend it, put your buy limit there, observe the market creating lower lows and lower highs to that point. Then you take your buy and target this high. So that will be all for today's class. And if you have any question as regards to this particular section, please do well to drop a question in the comment section. Please like, share, comment, and also follow. And if there's any question, please do well and don't hesitate to ask. All right. So I still remain your humble boy, Dynamic Trader. All right. Please, if you want anything like mentorship or guidance, don't hesitate to consult me. Thank you very much. Bye-bye.